Our live trading room is open to worldwide subscribers. We have some odd 24 people in the room early AM, 9:22 AM Eastern Standard. Volume now stronger coming in. 15:30. We identified this trade back at the preferred entry at 23.25. ES trading real time near contract month June 2014. Again, in our live trading room. We understand that we have superior resistance in front of us at 24.25, which is the most recent all-time price level associated with the open and closing areas on the 15-minute chart as well as the 1-minute chart. A higher risk trade, although identified by this methodology, could be taken with the understanding that you have a quick price profit target, 24.25, and if not, you need to get out of this trade as fast as possible to limit the risk to the downside. No need to get out with a point and a quarter loss, traders. If this trade doesn't go, you understand what's in front of you. Under a higher risk trade category, trading the absolute minimum amount of contracts. Market's tight, very tight. In the event that these prices don't stick and continue to trade up, once again, and it is a blow-off on a 1-minute chart to the upside, but then look for price to turn back around with a lot of volume coming in, subsequent volume, to drive the prices down to the floor at 21.50, as hammered out by the daily level from 5/30/2014. It is now 9:24 AM on June 2nd, 2014. Looking to see how this trade will play itself out. You know, in rare cases, I've seen the market open and prices blow right through. But, hey, anything is possible. I'm going to cut this tape, and as prices continue to come to us, we will pick it right back up and roll it. And prices continue to trade up. Our primary market, S&P Mini Futures near month contract being traded since 2014, now at 23.75. Quick target remains at 24.25, traders. If you are in at 23.25, you have a current half a point profit. You can take off the board right now, early morning. Chicken money flow is now back up with continued momentum to the upside. We have 2 minutes and 40 some odd seconds until this market opens, people. Holding 23.75, 23.75. Now remember, the target on a 15-minute chart is a quarter of a point below here at 24 based on an open and closing price basis. The high is a tick above. So if you don't get through 24, which we're at right now, on a 1-minute chart for the blow-off here, then that's it. And it appears that that could be it. So there's your 3/4 of a point you could have got hitting the 15-minute level, finding that as resistance, having your price filled by an order previously established, and there you are, in, out at the 15-minute level. Never got to the 24.75 level. So we have identified one profitable trade this morning, and out of two, got to be fast on the gun, but this is the way it is. Like I said earlier, these are the current market conditions that we're in as we're trading into all-time resistance area here at the 24, 25, 24, 15-minute level, traders. I'm going to cut the tape. For more information on this trading room, you can contact us through the Contact Us form at theinsidetechnician.com, and Adrian Bickham, the Inside Technician's acting agent, will respond. Real-time trade identified at the 1921-25 area for preferred fill. Our primary market, ES, near contract month being traded at 6/2014. We have price profit targets established to the downside at 2075, 20, 1950, and 1918. Incremental price profit target's already been hit at 2075 right here, managing the trade to the downside and looking for a larger move as the market is open. And we are now at 9:42 a.m. on June 2nd, 2014. That's 9:42 Eastern. June 2nd, 2:14. Price profit target hit for another half a point gained after a half a point gained here on the upside trade. And price is moving back up. If this is a blow off to the downside, people, there's no need to give a lot back. No need to give a lot back. We are in very tight market conditions, probably some of the most difficult trading that any trader could ever attempt to make. MTM 21.25, that's 21.25 at the original preferred entry price. Prices hold that 21.25 or daily level at 21.50 as resistance. Prices can continue to trade to the downside. Prices get through that level, one would want to consider absolutely positively the higher possibilities of getting out of the trade. 21 and 21.25. $21.50 at the daily level from 5:30. That's May 30th, 2014. Great examples of risk control this morning here, in and out. Recorded in real time. If this trade doesn't go to the downside, lock in a half. Could have locked in a half here, quick out. If it doesn't continue to go to the downside, once again, this will be an excellent example of how to mitigate the risk to the smallest amount of money on a shakeout to the downside. We're at 21.50 MTM right now across the board. Your MACD is clear to be short. EMAs are clear. SMI is touching and back up. Shaker money flows, excellent position. MFI, excellent position. Holding 21.25. Come on, somebody come in with about 10,000 contracts. Let's get this short and get on our way. Let's go. Enough is enough. $21 MTM traders, 21. ES near contract. 6/2014. Holding. New 50-minute bar open. Price is up marginally. Holding the channel between the preferred end 21.25 and the 20.75 level that was here on a target 2 different times. Disparity gets wider on the MACDs compared to the signal line. Yeah. Come on. Here we go. Come on. 2075 hit again. 2075. So there's a fourth opportunity to get out with a half a point gain right now. And we have a probe below that now at 2050. That's positive for the continued momentum and the move to the downside, traders. And price is up 21, 25, 21. In a tight market, the accumulated points rule at the end of the trading day and at the end of the week. Pick up a half, 3/4, tight market. You add it all up at the end of the day. You do that a few times, you're in real good shape. Here's another probe to the downside. It looks like we're well on our way here now. Additional volume coming in strong. Now we're at the secondary incremental price profit target people at 1920 right here. So there you have 1920s compared to 1921.25. That's a point of that is a gain of 1.25 points. We'll lock that in, and the volume is continuing to rise. Here you have it, 1 1/4 points locked in. The probe below suggests price might even get to 19.50 on the next 1 minute support level to the downside. But right now there's a 1 1/4. You can lock that in and put that in your trading account. Some good green. For those of you that are new to trading, this live trading room is geared to let you know exactly where you stand every single second of every trading bar. The accumulated points in the new person's case would be the ideal thing to grab and walk with the profit to build your confidence level. 1950 now getting hit to the downside. 1950 against the original in on the preferred entry at 1921.25 is a substantial profit, people. Next level to the downside becomes 1919, people. That is 1919. Getting close, 1919 to the downside. And there you have it, 1919 price profit target hit, 9:49 a.m. Eastern Standard on June 2nd, 2014. What an incredible move identified by us this morning and taken right here in real time in our live trading room. I'm going to have to record this because people believe as an individual trader it's impossible to pull in this kind of profit. But as you're seeing, we've not only identified it, we've taken it. So the best possible idea would be to get out here and book that profit. Take it. Run with it. If you get another leg to the downside, fine, but prices are trading up. I'm already out of this trade, Brad.
Yeah, I am as well.
1919.50. Yeah, 1919.50 on a bad fill. I lost a tick. I don't know how, but you can't argue with these guys. You know how they are. It is what it is. How are you this morning?
I'm doing great. How about you?
I'm good. I made money today.
Nice, yeah.
I'm always good when I make money. And I'm happy that we had a chance to show everybody who's in the room this morning. There's some odd, let's see, there's about 30 people in here, exactly how we do what we do and how they can profit from it. You know, first out of the gate Monday morning. Yeah. It's good. Now, for those of you that would consider getting back in, you really want to get in the tick below right here at this point at 1919, if that's going to be another leg to the downside. It is possible. Does it have the same setup as the first trade the best possible setup? No, it doesn't. The indicators become overextended to the downside, but when you have a major market sell-off, which could be the case today, anything's possible. But the stair step down is what will trade. And that next entry point, once again, is 1919 right here. We'll let that sit there for right now. I'm just about ready to cut this tape. So we have the yen here, right here, at 942 at 1921.25. And then we have the out at 951 right here at 1950. $1921.25 against the out is a 1.75 point gain. $1.75 times $50 for every full point move in this market is an $87.50 gain per contract. Times my minimum 20 contracts that were traded brought in $1,750 to me. Plus the half a point move to the upside for another 20 contracts. So there you have two profitable trades today identified by our methodology, which is specifically geared to find, track, and trade real institutional money on June 2nd, 2014, 9:54 a.m. For more information on how to subscribe to this live trading room, you can contact us once again through our website at theinsidetechnician.com and simply go to the Contact Us form, fill out your information, all of your information, and you will be contacted back by Adrian Bickham, the acting agent for the Inside Technician and this live, highly profitable live trading room. So once again, traders, in conclusion, our methodology has identified a series of trades today, one to the upside, two to the downside, and prices are still moving to the downside. This is an incredible market sell-off today. It's now 10:09 a.m. Eastern on June 2nd, 2014, first Monday of the new trading month in June. We have had an extremely profitable day. Volume that's come in has been strong right after the nail that was sent through the coffin at 10:01 for 15,000 contracts. Things have just continued to take off to the downside. The second trade to the downside was entered at 10:01 here on a retracement to the upside after the probe came through on that low at 10:01, and you're looking at a move all the way down to here at 9:16.25. Here's the thing: every incremental price profit target on the way down has been hit. All of these levels, now the prices are trading up, people should be way out by now, locking in substantial profits, have all been matched up with a lot of the daily levels that we had laid out in advance, as you can see here, and then getting through those, even on a lower basis, every step of the way. Right now, it looks like prices may stop at this point at the 1915.25 level and find this as support or a quarter of a point below, because we have such substantial support that exists right at this level on a 15-minute chart that's drawn all the way back from these data points. So once again, in real time, as we identify these high probability trades in our live trading room, these are the types of moves that when the market does sell off, we are very capable of identifying with and taking and providing the same intelligence to all traders who subscribe to this highly profitable live trading room. This is Jeff Killian, the Chief Market Strategist for the Inside Technician, and Brad Logan. For more information, contact us through our website, once again at theinsidetechnician.com, at the Contact Us page form, and Adrian Bickham will respond, the acting agent for this live trading room through the Inside Technician.